everyone. Good afternoon, ladies and gentlemen. Thank you for joining us today. We are delighted to have Shakey's Pizza Asia Ventures today as they share with us their full year 2021 operational performance. I'm your host, Sarah Nicole Santos, trader at AB Capital Securities, and my partner for today is Ian Garcia. Ian, please introduce yourself.
Thank you, Sarah, and hello, everyone. I'm Ian Garcia, and I'm also a trader with AB Capital. It's my honor and pleasure to introduce to you today Mr. Vicente Gregorio, the President and CEO of Shakey's Pizza Asia Ventures. Shakey's, or better known to stock market investors by its ticker symbol PIZZA, is the country's leading full-service restaurant chain and food service group. Mr. Gregorio has been a key driver of Shakey's brand strategy, organization culture, core values, and mission since 2003. He started as the company's chief operating officer in 2013. Before becoming Shakey CEO in 2013, under his wing, the company expanded its store network fourfold and built up its roster of wow brands to 5. Hello, Mr. Sir Vic. Thank you for joining us. How are you today?
I'm good. Thank you, Ian. Thank you, Sarah.
All right, sir. May we please know who else is joining you from the pizza team?
I believe it's just only going to be me and our IR team, Dappy Texan and Chase Garland, who will be joining me today.
All right. Hi, Dappy. Hi, Chase.
Good afternoon.
Thank you for introducing your team, Sir Vic. We are very pleased to have you with us today. So everyone, without further ado, we will now turn over the virtual floor to Sir Vic, Dappy, and Chase.
Okay, good day, everyone. I hope everybody's staying safe and well. Thank you for joining us today and for your interest in pizza. In this call, we will be discussing Shakey's Pizza's earnings performance for 2021. Again, I'm Vic Gregorio, the President and CEO of the company. With me today is Dappy Texan and Chase Garland. And I believe we've emailed a copy of our presentation slide, have we? If not, feel free to reach out to Dappy or Chase and we'll send them to you. And later on, Chase will walk you through our financial results. Afterwards, I will be talking about our outlook for 2022 and our recent company initiatives. And then we will end today's call with a Q&A session to address any questions or concerns you may have. So at this point, let me now turn you over to Chase. Chase, can you show them the...
All right. Thanks, Vic, and thank you all for joining our call today. We are pleased to share with all of you our full year 2021 results. And jumping to slide 3, we see that pizza system-wide sales grew by 6% in 2021 versus 2020. Our fourth quarter 2021 system-wide sales registered a double-digit growth of 18% year-on-year, with same-store sales growth of 5% as dine-in strongly recovers and as off-premise continues to grow. On profitability, Pizza's 2021 EBITDA clocked in at 1.02 billion, a 560 million upswing from the previous year. EBITDA margin entered double-digit territory at 18.6%, which is an increase of 9.9 percentage points versus 2020. For the fourth quarter, EBITDA registered at 481 million, with margins at 27.8%, a jump of 9.2 percentage points versus the same period the year before. As a result, Pizza's bottom line for 2021 improved by 375 million, returning to profitability with a net income of 121 million. The surge in dine-in during the festive season amidst loosened restrictions brought fourth quarter net income to 156 million. And the change from the fourth quarter of 2020 is due to income tax expenses reported in 2021, whereas an income tax benefit was reported in 2020 due to pre-tax losses incurred. Overall, Pizza was able to power through tough operating conditions amidst the backdrop of an ongoing pandemic. Pizza generated net income for 2021 and is looking forward to a strong reopening play in 2022. Zooming in on Pizza's 2021 system-wide sales performance, Pizza clocked in 7.01 billion in system-wide sales, 6% higher versus last year. This is despite more prolonged quarantine periods imposed in 2021 relative to 2020. Fourth quarter system-wide sales landed at 2.2 billion. With an 18% growth, this is a significant improvement versus the fourth quarter of 2020. Pizza registered a 5% same-store sales growth for the quarter amidst relatively tighter dine-in restrictions imposed in the fourth quarter of 2021 versus the fourth quarter of 2020. You'll also note that this is a third consecutive quarter where Pizza posted positive same-store sales growth as dine-in recovered. We also illustrate in the next slide, slide 5, the progression of our quarterly system-wide sales for the past 3 years, juxtaposed against quarantine measures imposed in 2021 on the Greater Metro Manila area, where the majority of our stores are located. It's worth noting that in 2021, there were varying degrees of dine-in restrictions, with some months seeing no indoor dining at all. Pizza system-wide sales have not experienced a significant drop from the levels seen in the fourth quarter of 2020. Recall that in the fourth quarter of 2020, there were minimal dine-in restrictions as the metro was placed under a general community quarantine. We also note that the fourth quarter of 2021's permitted indoor dine-in capacity ranged from 30 to 50% compared to the fourth quarter of 2020's dining capacity at 50%. Nonetheless, system-wide sales for the fourth quarter of 2021 is still higher by approximately 400 million, an 18% increase year-on-year, with the SSSG of 5%. With stricter dine-in restrictions in 2021 compared to 2020, off-premise sales continued to increase in contribution, leading to a 70-30 off-premise dine-in mix. Looking at the quarterly trends, with the easing of restrictions in the middle of the fourth quarter, coupled with the onset of the holiday season, dine-in sales were significantly up during the last 2 months of the year. Throughout the year also, delivery and carry-out continued to outperform, registering strong double-digit growth on the back of investments in digital assets and operational enhancements. Moreover, Pizza continued to demonstrate a healthy balance between in-house and aggregator platforms. This is in line with our strategic thrust to strengthen and maximize our assets while leveraging our partnership with aggregators to reach more guests. As you saw, Pizza was able to sustain its performance throughout 2021 with a boost of top line by year end. This was mainly driven by 3 focus areas. First is our reignited store network expansion program, which was kickstarted during the early part of the year. We strive to be continuously be accessible to our guests. When 2020 ended, we maintained our store network, and then we resumed our store expansion in early 2021. We are pleased to share that we opened 37 new stores, exceeding the initial 2021 guidance of 30 net stores. For the fourth quarter alone, 9 new stores were rolled out, including 2 R&B standalone stores and 2 Project Buy outlets. Second, as always, value creation for our guests is a priority. In 2021, part of our guest value creation was done by launching relevant promotions to serve affordable offerings amidst an environment that saw softer consumer sentiment for the most part of the year. Third is our continuous drive to enhance our off-premise channels. In the third quarter, we launched our new and improved Shakey's Pizza Super App to double down on off-premise capabilities and enhance overall guest experience. We also launched our game-changing 31-minute delivery, if it's late, it's free, guarantee anywhere in Metro Manila, to further boost Shakey's competitive advantage in delivery. From our top line, we now turn to our profitability. Our gross margins lifted by 10.9 percentage points from 20.3% in the fourth quarter of 2020 to 31.2% in the fourth quarter of 2021. This significant increase is due to, first, higher dine-in contribution in light of less stringent quarantine restrictions, and second, menu optimizations rolled out during the quarter. Together with structural improvements and operational streamlining, the strong gross margins also led to improved EBITDA margins for the quarter. At the net income level, the normalization of income tax expense versus last year's income tax benefit, as well as the adjustment of deferred tax assets, resulted to a net income of 156 million for the fourth quarter of 2021. Now, looking at the full year picture of profitability, our 2021 gross profit stood at 1.27 billion, an increase of 37% versus last year. The full year gross margin landed at 23.3%, which is a 5.7 percentage point improvement versus the same period last year. 2021 operating expenses came in at 811 million, down by 17% versus last year. With this, OPEX as a percent of sales improved by 5.9 percentage points to 14.8%. These were driven by turnaround initiatives begun in 2020 and continuing improvements in operational efficiencies. Turnaround initiatives include right-sizing programs and optimization efforts both at the store and corporate levels. With the operating leverage impact of fixed costs, EBITDA more than doubled versus last year, growing to 1.02 billion and registering a double-digit margin of 18.6%. Note that pizza has been EBITDA positive since the third quarter of 2020. EBITDA improvements also trickle down to the bottom line. And with this, the 2021 bottom line is at 121 million, which is a turnaround of 375 million versus the 254 million net loss of 2020. Shifting to slide 10 on cash flows, 2021 saw a healthy generation of cash flows quarter and quarter, with the fourth quarter 2021 posting peak operating cash flows of 271 million, bringing full year operating cash flows to 866 million. This is a testament to our agile operations and cost discipline, which includes improving on our working capital management, strictly monitoring receivables, and renegotiating terms on trade payables as a part of our supplier management. Our strong balance sheet and cash generation from operating activities allowed us to adequately fund three things. First, the full payment of maturing obligations as and when they came due. In 2021, we were able to fully pay the 1.05 billion COVID loan that we availed in 2020. Second, the accompanying finance costs of interest-bearing loans. And third, CapEx, which amounted to 279 million in 2021 and was primarily allocated to new store openings and infrastructures for our off-premise enhancements. Finally, the JE Holdings infusion of 1.25 billion during the middle of 2021 provided extra capacity to development activities that strongly positions pizza for a reopening. In summary, pizza was able to power through tough operating conditions and managed to return to profitability for 2021. Dine-in recovery strongly supported system-wide sales in the fourth quarter, leading to a mid-single-digit growth for full year 2021 amidst a tough operating environment due to prolonged strict lockdowns. The team remained focused on prudently spending on initiatives with good returns to preserve liquidity as well as reducing controllable costs to the extent possible. This, together with the turnaround efforts begun in the second half of 2020, resulted in significantly reduced OPEX and improved EBITDA, which also allowed bottom line to return to profitability in 2021. That said, Pizza continued to see healthy cash generation and ended the year with a healthy balance sheet, which, when taken together with the infusion of JE Holdings, allow us to fund investments that allow us to position for a strong reopening play.
Okay, thank you, Chase. It's been a 2-year pandemic run, pandemic experience for us, and I'm very proud to say that we've learned a lot from the pandemic. It has allowed us to be more streamlined in our operations. We've implemented a lot of structural reforms to further strengthen our resilience, in the face of the very turbulent times. And because of all the efforts of the team and a good recovery due to the vaccination of the public, we now have turned around in 2021, and the fourth quarter was a big boost that allowed us to turn the corner and post profits in 2021. 2020, the pandemic year halted our 16-year double-digit run on top line and bottom line, And I've always said that while we were hoping to make it 20 years, if it had to end, at least the pandemic was an acceptable reason. No one saw it coming. It was like, for me, a black swan event. And so now we face the opportunity to restart another run of double-digit top line and bottom line. And we believe we are in a position to do that. Moving into 2022, this year, to ensure continued relevance and vitality, we need to really learn from the lessons and then think and act differently. What we were doing in before was no longer enough. So we need to evolve and adapt as the circumstances changes, and always be productively paranoid. We said we want to be always ready, agile, and ready to take on any headwinds that come our way. Despite these headwinds, we have strong belief in the strength of the Philippine economy and the reopening that is going to happen with the COVID-19 already part of our lives. Hence, we have made investments that will drive and sustain our growth. We're continuously investing in our stores. As you have seen, in 2021, we opened 37 stores. And we look forward to a strong reopening now that the restrictions are very light since the start of the pandemic. The Filipinos have been locked up in their homes for almost 2 years, and we expect them to celebrate with the family and enter into so-called revenge spending, which will boost the recovery significantly, especially for our concepts. Furthermore, given that the dining capacity is, I think, almost back to 100%, we anticipate more guests to choose out, celebrate, and go to the brands that they always love. Even during the pandemic, we built and scaled up our portfolio of brands. As you are aware, we made a bold decision to reignite our acquisitions and purposely investing in our brands and our stores. Store expansion is critical to purposely increase our brand reach and widen our footprint. And the Philippines has a long runway for growth in this regard. For 2021, like I said, we opened 37 stores, the most in our entire history. We also opened our first R&B standalone store last October in Quezon City. If you recall, R&B is one of the leading milk and bubble tea brands in Singapore, which we brought in with over 1,000 outlets globally. And this is our foray into a very profitable segment of the business. We can expect more to come. For 2022, we plan to further accelerate our store network and increase Peri-Peri and Shakey store by at least 42 new stores net in 2022. And we're looking at around at least 150 potato corner outlets. At the same time, we see opportunistic growth in expanding internationally. We're very, very pleased with the performance of our new Shakey Singapore, which opened in March, bringing our international stores of Shakey's to 5 stores globally. and the reception has been very warm. And franchisee wants to open more stores there. As for Potato Corner, we are still seeing a healthy pipeline for international expansion, with new outlets in Thailand, Canada recently opening. We also have opened a store in China, and we are on track with a target to expand to at least 3 new territories by the end of 2022. Finally, we expect a full year growth impact of our 2021 expansions, the new stores. So all of these new stores we open in 2021 will have a big contribution to the top line, which will be felt in 2022. Here in Shakey's, we believe that people is the most critical part, and we continue to invest heavily in our people. The health and safety of employees is very paramount to us. And to date, I am proud to say 99% of all employees working in Shakey stores are fully vaccinated, and about 49% have booster shots. And we are making a strong push to have that also go to all employees having booster shot. Through our Near and Ready program, this is another good program we initiated in the pandemic. One good realization: at least 80% of our employees are now working and assigned in the Shakey store near them. So that would really help the employees during the difficult times of lockdowns. It helps them financially, and it makes them come to the store more fresh and ready to serve and wow our guests. So those are also a good value and effect for the guest experience. And it's really something that we're very proud of. We're probably one of the few companies that does this. So last year, we also successfully concluded a CBA agreement with our workers. This will guarantee a harmonious working relationship again for the next 5 years. We've always had very strong, productive, healthy relationship with our union, and this newly signed CBA will ensure that continuing for the next 5 years. In addition, we are also conducting back Shakey's leadership training and summits. The last face-to-face meeting we had with all our store managers was 2 years, and I was very happy to see almost all of our store managers together again physically in Tagaytay. So, and we intend to continue and do more of this whenever it's safe, to make sure we impart the culture and the mission, which remains very, very important to the company. We also believe that investing in our brands will allow us to strengthen our category leadership, allowing us to maintain our #1 spot in the full-service restaurant chain category, as well as in the full-service pizza chain segment. In order to create wowing guest experience, we have continuously developed relevant and exciting innovations. The most recent is our 18-inch pizzas that come in different flavors and lunch. It was launched under the Pizza Americana banner head. Overall, we have striven to provide unparalleled service to our guests, supported by our digital investment and infrastructure. We introduced a very bold delivery promise: 31 minutes anywhere in Metro Manila, if you get it for free. Furthermore, we continually reward our guests by strengthening brand love through the launch of our new and improved Super Card. So we now have 2 Super Card, which is the classic and the gold. This expands one of our strongest assets, our loyalty program, for the broad consumer base. As we move forward, we will be leveraging the Super Card to unlock consumer insights and drive consumer engagement and purchases across the Spavi brands. This likewise serves as an avenue to tap partnership with financial institutions, and we can use this loyalty program, and create synergies with key strategic partners. Investing in the planet is a key mission of the group, and as part of our sustainability efforts, we are now into our 3rd year of plastic neutrality, which means we are able to offset our plastic footprint through a plastic recovery. Okay. We've also introduced healthy, better for you, better for the planet food options to our guests, no? Especially with the guests being more health conscious. No? So we have our plant-based products, our good burger, our good taco pizza, and our very delicious good nuggets. No? They're available in select stores. And our investment in the latest one, Potato Corner, we believe that activating inorganic growth opportunities is important, and hence the acquisition of a fantastic brand, Potato Corner, is shaping up to be the new growth pillar for pizza. Why? Because, like we said, it is an iconic brand, Potato Corner, with strong equity among both consumers and franchisees. It is a business model that is highly scalable and very asset-light, with attractive unit economics supported by industry-leading margins. And it has a vast global footprint, which presents an opportunity for growth by deepening its presence in key markets. Overall, our vision remains the same: to be the preferred and dominant dine-in and food service player in the country by purposefully building a portfolio of wow brands with strong equity and industry-leading margin. And in the current roster of brands that we have right now, all have their roles to play in our portfolio to achieve our vision. Shakey's being the core, our core brand. It is stable, very healthy cash flow generation, and which will allow us to invest in the growth of our rapidly expanding brand, Peri Peri. At the same time, we will fund the growth of our emerging brands, R&D and Project Pi. These emerging brands are specially designed to capitalize on evolving consumer needs, which will allow us to future-proof the business. And with the addition of Potato Corner to the Spaghi family, apart from many synergies that we see, we will be able to unlock further opportunities in the global arena, aiming to solidify the brand's leadership in the flavored, French fries, and kiosk segments. The long-term vision, given all this and barring, of course, any extreme pandemic lockdowns and other external factors, we are seeing that 2022 system-wide sales will be at the minimum, will return to pre-pandemic level, but will most keen. Again, this will be driven by the dine-in, the strong dine-in recovery we expect on the back of easing mobility and capacity restrictions. Continued strength in our off-premise business by investing in digital infrastructure and guest value improvements, such as the 31-minute guarantee. Picking up the pace with respect to our store network plans, we will be growing even faster this 2022 with at least 42 stores net. And that's just for Shakey's, and the rest of the group. Potato will be about 150, like I said. And of course, Potato Corner's acquisition. All of these are key building blocks to drive volume growth for this year and the years to come. Looking at performance for the first few months of this year, this far, we are quite on track to hit our top line guidance. And we are planning to start a new wave of double-digit growth in 2022. We are looking to ramp up our capital expenditures to unprecedented levels, targeting at least 650 million, with a bulk allocated to new store openings that I mentioned earlier. Facing headwinds such as those coming from the tensions in Europe, we will pursue efficiencies and cost optimization measures to mitigate these headwinds, as well as maximize synergies with our new brands. We can reach pre-pandemic profitability most likely by 2023. All in all, we believe we are well positioned for mid to long-term growth. We have plans in place to build and scale our brands, including our vast network of stores, our franchise partners, and our people. We are ready for a strong reopening play. We have growth momentum on our side and the capabilities to fuel the company's growth for the next year and beyond. And with that, thank you for your continued support and continued interest in pizza. And now I'll open the floor for the Q&A session if you have any.
Thank you very much, Sir Vic and Chase, for that comprehensive presentation. And also congratulations on the result. The past 2 years has been challenging for you, but it is so good to hear that you have navigated your way through the pandemic, and Shakey's is now entering the endemic stage as a larger and diversified company. So for the question and answer, oh, by the way, before our question and answer portion, I would like to acknowledge the presence of Miss Rose Victor and Dappy Texon of the Investors Relations team. Hello, Dappy and Rose. So Ian, do the honors for the first question.
Okay, so first off, we'll be reading the advanced questions from our audience, and there will be some scattered questions from our research team. But in the meantime, if you have any live questions, please feel free to type it in the chat box below. Okay, so our first question is an advanced question. With all the incoming competition, how will Shakey's remain as one of the top pizza brands in the Philippines? I guess the question is, what's your strategy to maintain your market share in the pizza category?
Okay, both in the pizza category and our segment, the casual family casual dining category. As I mentioned, over the past 2 years, even during the pandemic, we've been preparing and positioning the group to a strong reopening. We always believe, it wouldn't be going on forever, this pandemic. And badly hit as the industry was, we knew there was an ending. And so we were focused more proactively on preparing for the comeback, for the bounce back. We had an edge because even before the pandemic, we had one of the highest margins in the industry. And we also have a good revenue play on the different channels. We have different revenue sources. So when the pandemic hit us very, very badly, the industry, I mean, we had a strong play in delivery and off-premise because it was already something we've invested on heavily, both in the digital transformation area and into our delivery platform. Because it was around 30%. We were already right into creating strong partnerships with aggregators even before anybody saw the pandemic rear its ugly head, right? And we also had 6 ghost kitchens. So the off-premise, the pivot to off-premise by the public, we were ready for that because we had a play in it already. And now we believe is the time to really even strengthen it further because as all the other brands and players started to do their own delivery and off-premise business, we already have to strengthen and be on the next curve. So the strengthening and the investments we put in the delivery, like our very bold 31-minute guarantee anywhere in Metro Manila, or it's free, we believe is going to fuel and keep our lead in the off-premise business. Now on the dine-in, which will come back, we have been expanding heavily in the last 2 years. In fact, we ended 2020 with no net reduction. No, there was no reduction in our network. So that gives us an edge when it comes to store network. And on top of maintaining our store network in 2020, we actually added several stores. In 2021, we opened 37 stores. So that was already very aggressive, the most aggressive in the history of Shakey's. And they will play a big role in increasing our capacity to accept the dine-in business. This was also driven by the very long runway we have with our peri-peri and even with our Shakey's brands. But Shakey's was expanding in the Vismin and will continue to expand and now make moves in the international scene, like we mentioned in Singapore. But peri-peri, we acquired peri-peri with only 22 stores. And to date, if I'm not mistaken, I think we already have 59 stores and several more to open this year. So that will again keep us in the lead and give us the muscle we need to protect our leadership position. So whether it's dine-in, off-premise, we believe we will be able to benefit, because of the investments we put. And the bounce back that we see, especially in Q4 of last year, does not even have the benefit of the birthday parties, the catering. If you recall, we have big, beautiful stores with very good functions, and we used to be very, very strong, before the pandemic on birthday parties. And since March, we're seeing a wave of bookings and go back fully. That will be another source of the upside for us. So in short, I think we have found ourselves in a very good position for the bounce back and for the recovery. And it was done intentionally and also by the learnings that we have learned during the pandemic. I hope that answers the question.
Thank you for your answer, Sir Vic. It's actually quite impressive how you took the past 2 years as an opportunity to further strengthen your business and to build upon the strengths of Shakey's, which existed even before the pandemic. So before I move on to the next advanced question, I would like to, sorry, that just disappeared from my screen. Okay, so we have a live question from Iris Gonzalez of the Philippine Star. She's asking, will you also bring Potato Corner abroad?
Well, we are already abroad. In fact, Potato Corner is very proud to claim that they are one of the few Filipino brands that seem to have found that success expanding internationally and finding very good acceptance. So we have Potato Corner in 12 or 13 countries now. On
Yes,
top
it's
of how many?
Yeah.
12 countries and about 200 plus stores. So they just got stalled because of the pandemic. There's always continuous inquiry, and even in the last few months this year, we already have been opening more stores in Thailand, Canada, China, and we believe we will be able to resume aggressive expansion internationally very soon. At the moment, our group just took the reins early March. So we're trying to consolidate, right? Learn really ropes. If you know our group quite well, we are always all for expanding and aggressively, but we also want to make sure we expand properly. And we're very judicious whenever when we decide to open new stores. And that's part of the discipline that we have acquired through the years. So we believe that our experience in doing so, plus the wide acceptance of Potato Corner, will be a good opportunity for us to expand our group's reach in international. And we're excited really with the synergy so we will be creating with all of our brands that we own in as far as the international play is concerned. So Potato has better coverage now. Potato Corner, Shakey's has Middle East and now Singapore. And Peri Peri is our brand, so we can bring Peri Peri anywhere in the globe. So we intend to make a play and create and take advantage of the synergies that we see for these brands.
Okay, thank you for that, Mr. Vic. Okay, for the next question, the question came from Mr. Miguel Lopa. So he said, good afternoon. I see the margins improved greatly with gross margins improving to 23.3% in the full year of 2021 versus 17.6% in the year prior, aided by higher dine-in contributions, menu optimizations, and continuing improvements in operational efficiencies. I would just like to ask how sustainable the plan for margin expansion is for this year, given the backdrop of rising input costs, specifically in the rise of soft agricultural commodity prices, such as cooking oil.
Okay. I'll answer this. Maybe Myros or Chase, feel free to butt in if you have other inputs. Okay. The thing we have with our group is that we look always forward, and we've secured and protected our sourcing of key imported materials, particularly our cheese and potato. And so we have contract pricing, and somehow we're protected. We've reduced the impact of the inflationary pressures that we're seeing because of the conflict. But even with the improvement we have seen in 2021, the group's goal is to try to bring it back to the same margins and profitability that we enjoyed pre-pandemic. I always believe that was one of the competitive edge and advantage of our group, having the very healthy margins. And that is our goal. So the learnings and the reforms, structural changes and improvements we've made the last 2 years is designed to make sure that the margins are protected and strengthened. Okay? This allows us actually to prepare for the future, like this Ukraine-Russia conflict. As the sales are recovering to pre-pandemic level, the margins will be pressured. There will be headwinds. But as the sales come back, and along with the structural reforms we made, there is reason for us to be optimistic that not only we can go back to those healthy margins, but maybe even strengthen it. Okay? And that's why even in our expansion strategy, we want brands that have a very strong chance of producing healthy margins and scalable. Hence, one of the key reasons why we got attracted to BC. So that is going to be a never-ending goal to strengthen the margins and never to be complacent. So make sure we don't throw away the learnings we've had during the pandemic and adopt them in the entire organization, and continue to find ways to leverage on our growing volume, and synergies with the brand so that we can negotiate we can negotiate better with our partners and stronger. And it's going to be win-win with the supplier in SPABI, but more importantly, it's going to be a win for the consumers because it would allow us to keep our prices as low as we can.
Okay,
Yeah,
thank
I
you.
guess to add to what Vic also said, just a bit more color on commodity price, the commodities, right? In terms of our materials, usually like in the past few months, the prices, the commodity prices that have seen significant increases include palm oil and wheat, right? But looking at our, at least for 2021, looking at the cost of these materials, they're actually just around 5% each of the total materials. So looking at 2022, we're not really expecting any significant impact from these commodities. In addition, as as Vic has already mentioned earlier, we have our procurement team is always very active. They have a proactive strategy, so that allows us to see opportunities if ever these materials go down, then there's a buying opportunity. And that being said as well, we've already have a lot of covers for these materials, so we shouldn't also be expecting any significant impact to the bottom line for 2022.
Hi,
In
Myros
addition,
here.
in addition, the margin expansion also will be driven by the increase in dine-in, barring any further headwinds into 2022. If dine-in recovers in accordance to like what we see, then that would also drive margins, the margin expansion, given that the dine-in business is also in terms of the margins wise, it's actually better compared to the off-premise.
Something, Myros?
Oh, sorry. Yeah. Hi, Myros here. I was just going to add that for the top commodities that we have, say potato and cheese, we're pretty much covered until the end of the year. And when we say covers, this is not just necessarily physical covers, but in terms of the pricing of the goods that we're going to acquire. As Vic mentioned, we look at procurement from a long-term point of view. So as early as now, we're actually looking ahead and planning for 2023. And in terms of the other commodities, so definitely if there are windows of opportunity to lock in prices and our target prices are being met at certain times, then we take that opportunity and lock in long and lock in volume as well. Hope that adds little flavor to the answer.
Thank you very much. That's very comprehensive. I do have a few follow-up questions for the advanced questions that we got from the audience. Did you employ any price increase in Q4 when the prices started trending higher? And is this something that you plan to do in the future to deal with the inflationary pressures?
We did a very slight price increase, I think this December, mainly due to the chicken prices, if I recall correctly. But the price, as an overall strategy, we don't like raising price or selling price. It's something that we always do as a last recourse. Okay? So if ever the price increases we do every year would really be very, very low. Bottom line effect would be maybe 1-2% at most. But having said that, we've always maintained that operating in the casual dining segment in the middle part of the population, if you will, we do have the ability to pass on the price. We'd like to think we have to do that, but because we're very guest-centric, we want to make sure we create superior value. So we would rather leverage on our volumes and provide and create the advantage in acquisition efficiencies so that we can keep the prices not cheap, but definitely affordable. And that's what Shakey's is known for. Having a great dining experience, quality food that you love, variety, great place, great service, all at an affordable cost. That's our secret.
As a frequent customer of Shakey's, I would like to thank you for keeping your prices low. But on just another follow-up question, on the cost mitigation side, are there any cost mitigation efforts that you implemented recently, and are these cost savings permanent?
Many of the structural reforms and changes we implemented would have more permanent and lasting effect, especially in our manpower productivity systems. We have on the procurement side, I think we've locked in our prices, and we are able to leverage on our increased volume. Now that, for example, we do a lot of potatoes we import for Shakey's, but now with potato corner, there's even more potatoes. So, but we do have, the knowledge and the access to the direct suppliers. And we see synergies there because the potato corner we're just buying to traders, but they have the volume, no? So we're excited with the opportunities on that side of that raw material. And we will work on these synergies amongst the brands that we have, Peri Peri, Shakey's, and now Potato Corner. So we've been doing a lot of things since the start of the pandemic. It will take a long time for me to explain all of these. We've been meeting daily, basically, since March 16. No? In the past, we would have once a week meeting, but during March 16, it became a daily thing. And it allowed us to analyze the data we have, all the data, add more, and create the right insights, allowed us to act quickly and properly. And I think that has allowed the team to navigate the crisis in a way that we have, allowed us to be in a position of strength, taking advantage of the opportunities we know that will come.
Okay. And then another question from Iris Gonzalez from Philippine Star. The question is, last question from me, okay. Is Shakey's looking to acquire another brand this year or will focus on strengthening recent acquisitions for now?
Okay, thank you for that question. You know, I just want to disclose that since we went public and since Century Pacific, the CPG group bought in, we've been getting a lot of offers to consider acquiring brands, but it took us a time before we even made our first move, right? When was that? Peri Peri was 2019, June 2019. So what does it tell you? We definitely are looking to a future where we will have a portfolio of wow brands, all scalable, leader in their category, healthy margins and profits. But we want to be careful. We don't want to be caught in a hubris thing, right? So we have enough brands at the moment. We have our hands full. We will digest this. We just got Potato Corner again a month ago. But we will always be on the lookout for fantastic opportunities if they come. But for now, the focus of the team and my focus is to make sure we grow all of these brands that we have the fastest way, the most profitable way we can, and we make sure we have the right people and team to execute these brands. We have very strong belief in these brands that we have. We believe they can all be wow brands, brands that can wow their target market. So we will always be open, but our focus right now is on the current brand and making sure we execute and grow them as fast as we can.
Okay, thank you. I know someone here who's been wowed by Potato Corner. My friend Sarah is a frequent customer of Potato Corner, always eating Potato Corner in the office. I'm sure she's very excited that you acquired it. But
I'm an avid fan ever since I was in grade school until my late 20s. Every day in the office, especially I love the extra cheese on top. That's always my request. Extra powder on top.
I would like to know what's the revenue contribution from Sarah in terms of sales. I'm pretty sure it's sizable.
That's every day. Yeah.
But yeah, unfortunately, we have very limited time left. I think we have 4 minutes left. So I guess we'll do one last question unless there's a live follow-up. Okay, so after talking about your other brands, we'd like to know more about Peri Peri Chicken. What's the sales contribution of Peri Peri in 2021, and how much are you looking to grow this year, at least for this brand?
If the expansion is any indication of this brand is going to be one of our growth source, definitely. The runway for Peri Peri is extra long. Okay, we are mostly located only in Metro Manila right now, and Metro Manila is not even penetrated enough. So there will be a lot of opportunities for Peri in Metro Manila first, ideally, because we want to grow concentrically rather than just going all over the place. But there's already been a lot of inquiry, and we are very, very pleased with the way the chicken has been accepted by the market. You know, some people even don't know Peri Peri when we took over, only 22 stores. But now that we've opened the Peri Peri stores with a fresh look, with better service, but with the same exacting quality standard, juicy, flavorful chickens and other products we have, we're truly looking at this brand to be one of our biggest growth brands for the group. Potato is another story, Potato Corner, of course, because they're easy to grow with their kiosk and they have now proven market potential, international market potential. Shakey's, on the other hand, the Vismin is something that we've been strongly opening the last year and last 2 years. and we have more locations coming in. And international is where we see the new future arena of Shakey's. We own the brand in the entire Middle East, entire Asia, except Japan, and Oceania. So you can imagine that's almost half the globe. And once we continue to learn from all of the new store openings we have, and the recent one being Singapore, we believe we will be in a good position to grow Shakey's in other markets. And with the synergies we can create among these brands, international expansion tends to be the logical next step also for Shakey's. So we, again, like I said, we have so many on our plate. We have our hands full, but we're excited. We're excited with the potential and the upside that we see will come.
Thank you, Sir Vic. Might I make a suggestion? Maybe you might want to get Miss Maricel Soriano to advertise Peri Peri. I hope you got the reference. I don't want to give away my age. Anyway, so we apologize, but we are out of time. We might have missed some questions, but if we did, please feel free to email us and we will get back to you. I'm sure our friends at Pizza will be very happy to answer your questions as well. So if you have any questions, we're taking a record of any questions we might have missed, but please feel free to also email us any questions.
Okay, so before we end this earnings call, Mr. Vic, do you have any parting words for the investors?
Yeah, just briefly, I just want to say thank you again very much to you guys, for the AB Capital, and to your investors. And should you have other questions, yes, please reach out to Chase and Daphne and Myros. And I assure you that while the pandemic has brought a lot of challenges to our business, we believe that there are also a lot of opportunities. And now that we have learned a lot from it in the last 2 years, and we've adjusted and made the pivots necessary to strengthen the group in the new normal, in the new future where pandemic COVID will be part of it already. And we are truly excited with the opportunities that we see coming, and we're happier days to come. And we will start a new growth run. Thank you very much.
Okay, thank you very much once again, Vic, Dappy, Chase, and Myros for sharing the encouraging and strong performance for 2021. I hope our investors got to know more about the 47-year-old brand, a pizza parlor that has grown into a bigger company with diverse product offerings, ranging from charcoal chicken to milk tea, and of course, Potato Corner, a brand every Filipino snacker loves.
So as we move on from the pandemic era to the endemic era and to the new normal, as you said, Mr. Vic, we are looking forward to seeing more growth from Shakey's, and we would love to have you next time with even better earnings results. Hopefully we can arrange that maybe next year or maybe next quarter, who knows? All right, so once again, I am Ian Garcia.
And I'm Sarah Nicole Santos. And on behalf of AB Capital Securities, we thank you for joining us, and we look to make your investing experience as easy as ABC. Thank you for joining us and have a good day ahead. Thank you, everybody.
Thank you, everybody.
Thank you, everyone.
Thank you.
Thank you.
Help! I need a pizza! Hungry na siya! Metro Manila, you'll have it in 31 minutes. If it's late, it's free.
We got you, sir! When you're craving for pizza, anywhere in Metro Manila, you know we will be there. We'll deliver it with care. Anywhere in Metro Manila, 31 minutes. If it's late, it's free.
I'm on it! Go, go, go!
Your Shakey's Pizza delivery hero is here. Anywhere in Metro Manila.
Oh no, si Lola! Up, up, up.
Thank you, Iho.
31 minutes. If it's late, it's free.
You're late! I'm sorry, ma'am. your pizza's free.
Anywhere in Metro Manila.
It's back! The Shakey's Louisiana Shrimp Pizza. Topped with choice shrimp and a blend of southern summer flavors. Go and catch it today.
What's so good about the Good Taco Pizza? Made of fresh ingredients. It's unbelievably plant-based. It's undoubtedly unmeat, 100% uncheese, and ultimately good. Try it now. The Good Taco Pizza. Only at Shakey's.
Hey guys, Shakey's Pizza's here.
That's a huge Shakey's Pizza. Introducing the new Shakey's Pizza Americana. 18 inches of hand-tossed crust. Loaded with pure mozzarella cheese. Topped with premium ingredients. It's super-sized pizza goodness.
Wow, sarap nito.
The all-new Shakey's Pizza Americana. Buy one, take one Pizza Americana.